Hey everybody. Sorry, the Twitter Spaces is glitching. I started the old one where we had a bunch of people registered, and for some reason it just wouldn't start. So I had to create a new link. So we just wait for a few more people to join. As always, over created the content. I had to go about 10 minutes over. One day I'll get it within half an hour and maybe end early as well. But I tend to always over talk, right? So for those of you that haven't watched the YouTube video, feel free to go back and watch it when you get a chance. But I just wanted to take a step out and help people understand some of the greater larger macro trends and why people are so disjointed and disagreeing in terms of what this actually means. And obviously, I always like to set the preface that no matter what actually happens, I've always set myself up to be prepared for three different scenarios. And I'll just cover those briefly. And if you'd like to ask a question and come up, then raise your hand right now, and Azad will start to bring you up shortly, because it's really going to be you that's going to shape this space, and I'll cover the content based upon where you want this to go. But I always prepare for three different scenarios. One is that the existing empire stays, and I believe that the US central bank digital currency will be the deleveraging event. And really, you're seeing the backstopping of the US banking system play into that trend. But instead of doing it by debt and financial products, I believe eventually they will choose a central bank digital currency as they roll out Fed now as their beta in the months ahead. So I'm prepared for that scenario because I believe that they may even be able to roll it over for longer than I live. But I personally believe that we will get a change of empire in the time and a change of world reserve currency in my lifetime. And so for that reason, that's where gold comes in. You don't know who the next empire will be. I'm speculating that the Chinese yuan is the one that's making the biggest bet and play at that, but it may even be technology. We may hit the point where the next empire is a artificial intelligence that does not identify with one currency. You know, the rate of innovation, we've already seen that BlackRock and their Aladdin technology and artificial intelligence is managing $21 trillion of assets as we speak. It was actually the one that decided in the last 2008 financial crisis which banks to go bust and which ones not. It's used by many central banks around the world, and it can perform, I believe, in central banking at a much better rate than any human into the future. So that's another trend that we need to play with and need to understand. And you know, in the decades ahead, we hit a point of singularity as well, where central bankers, artificial intelligence central bankers, can probably create better currencies and better algorithms than any human that identifies with borders in a country. So these are the interesting things. So I think gold is important. You know, if the whole world goes to crap, which is what most gold investors believe in, that the internet goes down one time. I don't believe in such scenarios, but I'm prepared for that and a change of empire. But obviously, all my wealth has been generated by being involved in Bitcoin, which is an exit from the traditional financial system that allows you to own your own money, spend your own money, and its monetary policy is 100% maths and code that cannot be changed by any individual, any government, or any central bank into the future. I was on a space earlier with people that hadn't quite subscribed to the philosophy of Bitcoin yet, but are asking the questions. You know, they were gold investors. And I think that the whole thing between gold and Bitcoin is a false narrative. Gold is a great hedge against Bitcoin, and Bitcoin is a more speculative store of value than a store of value that's been around 4,000 or 5,000 years. So I always like to preface that I try to prepare myself for all scenarios. And then even within those portfolios, I go a little bit deeper into spending, saving, investing, and contributing, so that whatever happens in the world, I want to be in a position where I never go back to deep in debt and financially ruined, because I know what that's like. And I know exactly how that feels, to feel the level of financial anxiety that I felt in the past when previous businesses didn't succeed, and I was fully 100% exposed to one outcome and just couldn't save and couldn't get enough money together. So we were talking a lot about the US, China, Taiwan side, the fact that Russia is now, settling in the Chinese yuan, or an announcement. It hasn't happened yet. An announcement that they would like to settle in the Chinese yuan across 85% of the population, which is Latin America, Africa, and Asia. It doesn't mean everyone's opted in or everything's going to happen, or it's but it's a chipping away at a greater trend, as China is set up slightly differently, and we all know that it is also, it built itself from a savings economy to a debt-based economy. So it's built upon the same debt-based Ponzi scheme, but it has really different ideological differences in terms of how it would manage its larger companies. So rather than having too big to fail banks, it has too big to be capitalist companies, where if you reach a certain stage as a bank or a technology company, you're just integrated with the government and you become one part of the system. And so therefore it's a lot easier to roll out these technologies, which will get a lot more pushback because of I think, one of the greatest documents that exists in the US, which is the Constitution. But what we've seen is that in times, the difference to be able to adjust to this world where, rather than banks creating money, it looks like central banks are going to consolidate. I'm going to cover a lot more on this next week, the whole consolidation of smaller banks into larger banks, backstopping, picking winners and losers, and really that laying the foundation for when those larger banks have distress, rolling into a central bank digital currency, digital wallet, and them essentially becoming fintech companies that sit on top of that CBDC, and the importance of Bitcoin and its proof of work, especially in the AI trend. So when AI CBDCs have to compete with Bitcoin, proof of work becomes one of the most important thing for really regulating those different trends, as Bitcoin becomes a regulator of the regulator. Okay, so Azad, let's see if anyone wants to ask any of those questions. I gave a brief overview. Are you there, Azad?
Yeah. We've got our first speaker, Eric.
Hey, Simon. Hey, Azad. Maybe this question comes across a little bit naive. Obviously, central bank digital currencies are coming to the U.S. It sounds like, Simon, obviously you don't approve of it or want that to happen. However, in China, as your slide mentioned, there's 260 wallets that have been adopted in China or forced upon the Chinese in China, however you want to look at it. In America, I think that the wallet adoption rate is, I think, between 50 to 60 million, although that number may be a little high. I think MetaMask has 20 million wallet downloads, and one would assume that each person has maybe two wallets. So maybe the unique wallet users for MetaMask is 10 million. I guess what I'm trying to figure out, Simon, is regardless of whether or not you believe want CBDs to happen in America, it's coming. Do you believe that enterprises have some sort of political responsibility to help onboard new people, non-crypto savvy people, to have digital wallets, or are we going to rely on the banking system to do that?
Yeah, great question. So my original thesis, it was that a CBDC would end up with no blockchain in the end. And so it could just be, a digital wallet, a database that is changeable. And so I don't think you will need the same type of onboarding and user experience. But interestingly, FedNow is taking some of that user experience that we're used to in the crypto market. So, and again, I believe that the inevitable destiny of fiat currency is that you have to deleverage it. And so rather than, we've had a several hundred-year experiment in fractional reserve banking, where it's led to greater debt every single cycle because of the systemic nature it creates. When you allow banks to create money as debt in every, and you end up with more debt than money, and so therefore you end up rolling over. And it's a free market way of creating money, but it led to crony capitalism because of the excessive debt. So the only way to introduce new money into the economy, I think, is as a function of a bank going bust. So just as they backstop the banks, if you don't want to adopt a central bank digital currency, just like maybe you're involved, I know you are, Eric, in a Chapter 11. If you're involved in a Chapter 11 and your money's held at ransom, suddenly you'll accept things that you never thought you would ever accept under a normal free market. And so I think the same will happen with people's deposits. And so I don't think people lose their deposits, but I think they get bribed in a cram down in order to swap their deposit at that bank into a digital download wallet where they will have the same balance, and the assets can be auctioned off onto the central bank's balance sheet or sold to the big banks. And the user experience will just be, a simple wallet. You'll download that wallet. You will see a virtual balance in there, and it will be very similar to how a bank works. I know for one, the money that I have at a bank, I don't consider it my own. I don't consider it that I can spend it without providing lots of documentation, and I know that it will always be worth less in the future. And so I only keep an amount in there that meets my expenses and meets certain security needs. And so I think, yeah, the wallet will be a very seamless user experience. The user experience of money will significantly improve in terms of it takes out a lot of the systemic risk, and just backstops the system. The problem is it's a radical shift in freedom, and everything that we're used to, because at least banks were one step removed from the central bank and the government. So I think the onboarding will be really, really easy. It would just be your bank is bust. It's either rolled over into a large bank, or you download this wallet and here's your balance. You've now not lost any money. And guess what? It doesn't have the same risk because it's backed by the central bank and the credit rating of the US government. And therefore, you have essentially modern monetary theory. And really, governments performing the role of who creates money, whether you have it done by a private bank or a bank, was the question that I tried to debate many years back. So yeah, now then you've got the ownership of money. That's where people need to self-educate. They need to start learning how to self-custody. That's an important step. And we will have centralized solutions and decentralized solution, but the real user experience of Bitcoin in the end is owning your own money, spending your own money. And then we have the rate of innovation where, based upon that backstop, people can use decentralized financial products in order to gain access to those financial products. So yeah, it's an interesting trend. People need to be ready for all, and now is the time to experiment. And that's why I think we're seeing a lot of volume go into Bitcoin right now from both the crypto markets and those that have suddenly learned about their bank deposits as well.
Yeah, so I started the question with asking with the theory that the central bank digital currency for America would be on blockchain. You're saying that you don't believe that that's the case. However, the question kind of still remains. I asked the enterprises at that point have a political responsibility. Now my question is, if you think that CBDCs in America are not going to be on blockchain, do you think that enterprises have a responsibility to now onboard non-savvy crypto people to have digital wallets and to help with the adoption of cryptocurrency?
Yeah, whether they'll see it that way or whether it's mandated that way. But yeah, I believe everybody has an individual responsibility. And I've been investing in companies in this sector to try and support people transitioning. And we're now seeing that, NASDAQ just announced that it's going to be doing custody for cryptocurrencies. And I think now this is the moment where the big boys say, hey, you guys all screwed it up. And we're going to do this properly. And we're gonna start offering all these different financial services. But the tension between custody and self custody is going to be an ongoing tension, and requires that innovation, country competition, and yeah, I think everyone's got a responsibility to get that right balance. And I do believe that there is a custody and self custody balance that people need to get, because there are benefits to both. and that's another financial management. Thanks, Eric.
Cool. Thanks so much. Azad, you can drop me down. Thanks, Simon.
Okay, next speaker is Jeff.
Hey, Jeff.
Jeff, are you there?
Hello. Yes. Thank you for letting me come up to speak. I wanted to just kind of note for people. I'm not, and first of all, I'm not an expert on banking or anything. I don't want to try to come across as an expert, but I do want to add a little bit to what was just said about cryptocurrency. And my understanding is that Bitcoin and CBDCs are not identical, and a lot of times they're used kind of interchangeably as if they're both an amazing thing that can do great things. FedNow, for example, I think is just the first step toward a full-blown CBDC. So my understanding is that it will give a much faster response on both the front end and the back end of transactions. But what I wanted to really mention was the dangers of CBDC. And I'm going to post a couple of things after I speak up in the nest, so you can learn more if you want. But I think some of the best places to look for this information is the Bank of International Settlements. They've got a lot of information on YouTube, and I'm sure they would also as well on their website. But what I wanted to state, I'll try to make it like within just 1 minute, because I know others want to speak and everything. But I think, for one thing, we've seen what can be done, like in Canada when they had protests, and they were able to block those accounts, right? So that, they didn't like what they were doing. The government didn't like them protesting, so they would go in and block those accounts. We've heard a lot about Chinese social credit systems. We know that our own government has been spying us for over 15 years. That was revealed during the Bush administration. We've seen in the Cyprus banks back in March of 2013 that banks can go through and do a haircut, which means that it sounds really nice, right? But what it means is they go in and they tax your account by however amount that they want, 10%, 20, whatever they like. They can just take that right out. They see this money as their liability, whereas you see it as your asset. Two different ways of viewing that number that you view it as something that you have earned yourself. The question is, with total control over these accounts, which is what CBDC can provide if it's allowed to be implemented, what is it going to take to get people in there? Well, we have to have our house of cards that we call our financial system fall down. Is that what has to happen? Or can it be introduced with a little bit of free money, a little bit of universal basic income, maybe $1,000 a month just on the side while you keep everything else? What is your price point? What would it take to get you to download that app? There's 7 right now on the iPhone. What would it take to get you to download it and use that money, which would be specified in certain ways so they can control your behavior? What would it take? What is your price point? 1,000 a month, 2,000, 5,000? And one other thing I wanted to mention is that there's legislation going around the states. Washington State just had a Senate Bill 5077 come through under the name Uniform Commercial Code. There was overwhelming negative response to that from constituency. I think like 1,300 spoke or tried to speak against it, and only 3 spoke in favor, and the 3 had financial ties to benefit themselves. One final thing I wanted to say before I go is that, from 1900 to 1971, gold backed the dollar. From 71 until today, we have oil backing the dollar that pushes it into world reserve status, so that if you want to buy or sell gold, or if you want to buy or sell oil, I'm sorry, it must be done in US dollars. We're seeing a lot of push against it now by the BRICS nations, where they're ignoring that, using the Chinese yuan or other forms of currency. What is going to back the CBDC? There's a lot of theories, and my theory that I've got, and you may have a different one, is that we physically will back it. If you look into the fourth industrial revolution, if you look into the singularity, if you look into all these things, physically we are going to be the ones to back it. And that is one more reason to stay away from the CBDCs. Thank you. Thank you. Goodbye.
Hey Jeff, thanks for sharing all that. I agree with so much of it as well. So you know, I gave in my book in 2011, I gave a way of doing it through peace and a way of doing it through force. And I think humans will always choose force, particularly, and this really underpins like the difference between the ease of rollout in China versus the ease of rollout in America. Because while there is no major pain point, I think the extreme left and right popularism will turn it into a political issue. And so therefore you can't get it past Congress unless you can do it the same way you got the Patriot Act, which is a great ginormous fear of terrorism that that then leads to, you know, even the vaccine, let's say. It then leads to you making extreme compromises in your privacies and your beliefs, because out of sheer necessity and fear. And so I think the same will happen with, oh sorry, can someone mute themselves? I think the same will happen with CBDCs, because I think any time, particularly in the political environment right now, if Trump got re-elected and wanted to introduce a CBDC, or if Biden tried to introduce a CBDC through U.S. executive order, it just becomes a political a campaign essentially that leads to a loggerhead and probably not the right type of introduction. So the different types of events that can lead to it, it could be backed by banks going bust, was my original thesis, where people don't lose their money. It could be all of the things you said, a universal basic income based upon an algorithmic way of expiring your money if you don't spend it before a certain date. And then that will also have to be spent on a certain type of product. I mean, can you believe it? During US actually had helicopter money. We probably, I don't know if everyone remembers it. It's just things are moving so fast. And the archaic system at which that was distributed, is another way of doing that. So I think it's always going to be backed by extreme circumstance and a measure that makes people really want to opt in. And to me, the easiest way is download the app if you think you're going to lose your bank balance, and look at what we're experiencing right now. We can, they can backstop the whole system. They can just say no more risk, no more fractional reserve. Banks don't create money anymore. And they can be peer-to-peer lenders and financial technology companies that are built on top of our APIs, and they become the front end on top of the API infrastructure, and is going to create a vastly superior user experience in terms of ease of payment, ease to transact. But the compromise, as you've quite rightly pointed out, is that you give up your freedom, liberty, and privacy, and the things that made that we value so much in the Bitcoin community. So I think everything you said was pretty spot on. What's going to back it? I don't think you need to back it, but I still think the underpins of the entire central banking system is still gold. And I think the people that will get a seat at the table if we have massive conflict during the next monetary renegotiation is based upon your gold to GDP ratio. And I believe that China has the highest GDP to gold ratio. The stats of what they actually have versus what's reported is slightly different. But then obviously since Russia lost its dollars, Maybe it's there's some kind of purchase negotiation going on there between using DCEP in order to purchase a chunk of that gold. You don't know what these relationships are going to be right now when this technology exists, but I still think that the individual Bitcoin standard is the voluntary system, because every government, just like El Salvador, can decide to use proof of work to opt out of their currency or the currency that they adopt. Every individual can do that. Every company can do that. So there's a voluntary Bitcoin standard, and there's a forced, probably gold standard, which always gets reneged. And competition is what stops people from abusing those powers, particularly when we enter into a more digital, borderless world, where physical geography becomes increasingly more important to the TikTok generation that will probably have a better life in the metaverse than they do in the physical world, based upon all the trends and everything that's been happening. I think it's a really good question. What is your price? What would make you download that wallet? And I think most people would if it was free money, and they'll take the inflation, and they'll see it as if you don't take it, someone else will do it, and you'll suffer. Okay, cool. Who we got next?
Thank you, Jeff. Okay, next speaker is Bradley.
Hey, Bradley.
Hey, thanks for letting me up. Simon, I'm gonna ask you some questions. I want to make sure that I understand your position on Bitcoin's possibilities. And do you really see Bitcoin as as something that could act as a currency in the future? And the reason I ask that is because I think in a lot of ways, I don't think Bitcoin makes a good currency. And when I say currency, this is what I really mean is a unit of account that's used in contracts. One of the things that the United States has strove to do is to make the US dollar the de facto unit of exchange when it comes to writing contracts. And that just sort of, it gives the United States an awful lot of power, but it's also very convenient. I can't believe I'm going to defend the fiat system, because in so many ways, I want to make sure that I'm clear that I do share your feelings about the fiat system, but we have to concede that this period of time has been unprecedented in human history in terms of our increases in our standard of living, economic output. The fiat system has done pretty well. I mean, if you had to pick a century in which to live, I don't think many people would choose anything but the last 100 years, which has been a fiat era. And I think one of the biggest thing I guess I want to say about Bitcoin is I think there's a problem with Bitcoin as a currency when it comes to its inevitable deflationary nature. It's got a fixed size, which everybody loves, but the reality is, until our population starts going down globally, the total economic output of the world is going to be going up. And so I don't see a way that you can have a fixed money supply that is being used in an economy that's continually expanding, because it creates a number of problems just from a purely economic point of view. You're writing a contract, two companies are writing a contract, and you're trying to establish a price on something for 2, 3, 4 years in the process, and you're basically saying, well, the price of this is going to be lower in 5 years. There's all sorts of problems with that, and historically, time periods where we had deflation were periods that were very bad economically. The classic example is the Great Depression. That was a deflationary era. Deflation is really hard on the average working person. It's great for rich people because if you don't have to spend your money, you just hold on to it and it increases in value. Gosh, that's wonderful. But if you don't have surplus income or you don't have established wealth, deflation is a real killer for you. And I guess I'd like to hear your response to that, or maybe I just don't understand what you mean when you talk about what Bitcoin has the potential to be in the future.
Yes, great question and great comments. Thank you for sharing all your thoughts there. Really interesting things for people to ponder. So I've always believed in a two-tiered economy. That's why I believe CBDCs are inevitable, because I believe that if you create money through a bank and you have more debt than money, you inevitably create these end in hyperinflationary cycles. That leads to the destruction of that particular fiat currency and a replacement with a new fiat currency, with a transition between hard money in between, and normally a conflict when no one trusts each other. So they only settle in the currency that's not connected to any country. And so if we enter into a more conflicted environment, nobody trusts especially when, Russia has had their dollars just wiped out like that. They don't trust dollars. And so they transact in gold. But I believe in a time of conflict, Bitcoin would be a really good way of people settling between an environment where people don't trust digital currencies, because central bank digital currencies can be deleted. And I don't think they exist backed by proof of work on a mutable blockchain, because I think for political reasons, CBDCs will always want to maintain that control. It's why they've always got a backdoor. And for very good reasons, because it's a game of chicken. If you don't do it, someone else will do it. And so I do not believe that Bitcoin becomes a great unit of account and median of exchange, because until people price things in Bitcoin, you will be subject to speculation. And I don't think that people will price things in Bitcoin. I think that fiat currencies perform a very useful function of taking currency risk out of your day-to-day expenses, particularly if you can have algorithms that manage them better than humans with less corruption. And so if you can create a scenario where proof of work regulates central bank digital currencies, and central bank digital currencies provide utility for spending in a world where your costs are the same as the central bank digital currency, then it becomes a very useful mechanism for spending, but a useless mechanism for saving. And so the two-tier world is still, I think, the best world, because if you enter into a world where there is savings, you put savings back, because what fiat currency did is it took savings out of the economy. It went from, you either have money you spend and you borrow in order to consume because you're on the wrong side of wealth inequality, or you borrow in order to speculate and invest, and real estate and the stock market generate a wealth effect for you. And those that made those moves end up on the right side of wealth inequality. And those that get those moves wrong, either over speculated or never speculated, end up on the wrong side of wealth inequality. So I do believe that CBDCs and fiat currencies, they perform a very useful task for me, which is managing my day-to-day expenses and ensuring that I only keep the minimum amount in a bank that makes me feel secure, and allows me to meet my expenses out until an extended time frame. But it doesn't touch any of my savings. And so that's where I think you need the two-tiered world, and the two-tiered world has existed. So traditionally, gold performed that function for savings, and fiat currencies have performed that function for spending. The bit that went wrong is when people, when the central planners mismanaged the currency so badly that it decided that it would centrally plan everything. and not allow pricing and market forces to prevail, because we entered a world where the stock market's not allowed to crash. Why? Because politicians use it as a mechanism for getting vote in an extreme left and right popularism, where your sole job is to ride the 4-year cycle, the 4-year election cycle, and make your opponent look as bad as possible, because unless you give more and print more, no one will vote for you, even if they think that they're capitalist and Republican and right-wing and conservative. They still vote based upon how much you spend. And you can't break that cycle. It's a function of the 4-year cycle. The alternative is you have longer cycles, like you know, Bekele's getting a lot of criticism because he took away the 4-year election where you can get re-elected. And you know, countries like you know, leaders like Putin and Xi Jinping, they get criticisms for being long-term leaders, but from my experiences, you need quite a long time to achieve a goal, and 4 years isn't enough. So the politics comes in as well. But yeah, to answer your question, I don't believe in hyper Bitcoinization, because I don't think things will be priced in Bitcoin, and I think borrowing against your Bitcoin and having a wealth effect is an important, and I want to see that happening in both the decentralized world and also the regulated centralized world, to make that easier for people as well.
Okay, thank you. Next speaker is RHS.
Oh, great. Thank you. Thanks so much for bringing me up here. So, Simon, I just wanted to get your take on what the commercial and investment banks are doing now in order to prepare for this, you know, the CBDS, because, I mean, I'm looking at the stock prices, and they're holding up fairly well, especially the big ones. And, you know, if this central bank digital currency is going to take away a big portion of their business, you know, I find it pretty interesting that they're holding up as well as they are. But maybe there are things there that Jamie Dimon and others are supporting that we're not really aware of. So I'd like to hear your take on this.
Yeah, I've always said that the battle is not between Bitcoin and CBDCs, it's between banks and CBDCs. And so the larger banks are going to be swallowing up the smaller banks. In order to do that, they required a backstop of the system. So they said, you, taxpayer, take all the risk. We'll create a financial product that makes it look like this isn't QE, because this is deflationary, because banks are going to stop lending. And therefore we can try and control inflation by rolling over the cycle, and move to Q. You know, many financial experts are saying it's not QE because of the technical definition, but the Fed has added 300 billion of assets onto its balance sheet, and it's reversed its half a rate hike to a quarter of a rate hike. And it looks like we're going to be, you know, moving back to something that looks very similar to QE. Now, people are saying it's backed by securities, it's a slightly different project. But as long as the central bank, it was taking $1 trillion off its balance sheet, it's now put 300 billion back on. That's quantitative easing to me, whatever you want to call it, whatever you want to, you know, justify it with. So we've already seen that you can't control. You will choose the market over inflation, and you try and create deflationary pressure, which is going to cause, you know, problems for a lot of people in a world addicted to debt. And so I think what the original question is, I don't think many of them know it's coming, but they probably think that they can maintain their control. And I think this is why everything to me goes to a CBDC to take out the bank when it comes under distress. And essentially you just do exactly what they did with Silicon Valley Bank, Silvergate, and Signature. They will continue to speculate on moral hazard as long as the government backdrops the system. They'll socialize the losses and take the profits. Large banks will swallow up smaller ones once they backdrop the system, and then central banks will swallow up large ones. And I think that will happen in a natural, organic way with financial crises that trigger the systemic risk events. And eventually they just become technology that sits on top of the API. And then you have to have a chaotic, orderly unwind of all those assets, which will probably all end up. In the end, this is just a simple game. To grow the economy, you have to have users that take on debt. When they're maxed out on their credit cards, businesses have to take on more debt. When they're maxed out, governments have to take on more debt. When governments are maxed out, central banks have to take on more debt. And the end is that the central bank has all the assets on their balance sheet. And the way to orderly organize that is the CBDC. That's what I think happens.
Thank you. Next speaker is Davis.
I just wanted to touch on, I would much rather live in the world of the past 100 years than the Middle Ages or any other time, even if I was wealthy, considering that there was a lot of fungus in bread, and even without that, there wasn't a lot of clean, potable water, and a lot of people just drank a mild beer, so they weren't thirsty all the time without getting sick from dirty water, and it was flavored with fir trees, thyme, and eggs, and children and babies drank beer too, and all of the plates were basically covered in mercury. But my question for Simon is do you think the forced limited supply of capital and cash in your bank account, say a 10, 20,000 pound limit, is going to speed up the velocity of money and help the economy, or will it hurt it if people can't save it all?
I too am incredibly grateful. So I'm 43, and when I was at school, I was reading textbooks and finding information through encyclopedias. And then when I went to university, I was learning on a computer, but printing it off into a file, and going through my file and searching for information by printing it off a computer, through to where we are right now, where pretty much everything I do can be done anywhere from my phone. So I'm really grateful that I experienced all that different transition. And I too am fearful and excited around what happens when artificial intelligence can do things that we become flies and they become intelligent. That's a world I think we will see in our lifetime. And I'm really, really curious and interested to see how we transition from that. One of the things that I think we need to figure out is, and I'll get back to your question, is if artificial intelligence are learning from the data that we're inputting and the way that we're treating each other on social media, we're probably going to end up with some pretty ugly bots. But I'm wondering whether the majority of people I believe to be good people, and whether they learn from that behavior or they learn from the toxic behavior of what we input into social networks, where we behave so differently to how we would interact if we were face-to-face interactions. And I'm very curious about what the bots will learn, and how we tend to behave very differently offline than we do online. So I think that's an interesting thing, because that's going to determine what the future of those bots are, what the future of that artificial intelligence is. That's a really interesting dichotomy in what feels like a chaotic world. So yeah, I do agree. It's if you look at the world, it feels very, very chaotic for a lot of people. But then if you can just get out into your gratitude and realize that there's so many people that are so worse off, and yet we allow ourselves to fall into a state of less gratitude than really many people would kill to be in the situation that we feel is our worst day. Many of us are in financial stress situations, in Chapter 11s and various other things. There's people in the world that would kill for your worst problem to be, their biggest problem, or would be their best outcome. And so that's another thing that we need to appreciate, because the world we do live in today is a truly unique time to be alive in financial history. And that's why I always end the talk on trying to remind people that this is one of the most interesting and exciting times to be alive in finance. We get to see what many people would never have seen, and none of us have seen a change in world reserve currency because none of us were alive when the pound declined and the dollar prevailed, or the Dutch guilder declined and the pound prevailed. None of us were alive for that. We get to experience that, and we have an exit, and that's why I'm just so grateful for Bitcoin. But yeah, the world that you live in, I already live in, so I don't know what it's like to be an American. But when you're not American and you use the US dollar system, whenever I spend my money, I have to provide all sorts of documentation. I know that it's going to take a long time. I set up a trust bank because I prefer using trust banks rather than fractional reserve banks. And I'm fortunate enough where I can have private banking so that I have a relationship just to try and get my money through in a system where you don't own your money, you can't spend your money. And I know people are talking about one of the crises of this is the speed at which you can move. And the $42 billion of withdrawals that happened at Silicon Valley Bank within a 24-hour period. For me, I can't move fiat currency at that speed. I can only do that in stablecoin world or Bitcoin world. I definitely can't do that within the banking system because the user experience of using money when you're above the $10,000 threshold absolutely sucks. And I think it will get faster as long as you obey everything that the government wants you to do. But as soon as you try and do something, which is what Jeff was bringing up with like Canadian truckers and various other things, and the history of Bitcoin, we started to get adoption because people wanted to buy drugs online and not deal with gangsters in the streets and have a way of ensuring that the product that they're consuming voluntarily was not full of poison, and they didn't have to go meet a gangster in the street and risk their life in order to consume drugs. And when the financial system blockaded WikiLeaks from holding governments accountable to international crimes, Bitcoin got adoption, and Bitcoin allowed that to happen. When people were losing bailed in, much like some of these Chapter 11s, you receive equity instead of a bank deposit balance. They turned to Bitcoin. When there was a Greek financial crisis and you could only withdraw $10 from your account, some people turned to Bitcoin. When India had a demonetization process where they had to take the money that they'd hidden under their mattress that they didn't convert to gold and put it in their bank account, otherwise the lower denominated notes would expire, and they had to risk their life standing outside a bank with sacks of their lifetime savings, and some of them got it stolen, so that they could digitize that money and put it through, and try and get their cut. Some of them discovered Bitcoin. And so it is these crisis moments that people start to discover it. And I do believe personally for me, I don't know what it's like for you in America or because I live in a different country or an island, you're treated as a criminal, especially if you legitimately earned your money through Bitcoin and you can prove how you earned all your wealth. I spent 9 months of forensic investigations proving to my bank that I could purchase the house that I wanted to move into and buy outright. And because I didn't borrow the money, they saw that as a transaction to be extremely suspicious of. And really they punish the people that have been able to generate that wealth effect, because if you've got money and you're not leveraging debt, they consider you high risk. And if you generate it through hard money and Bitcoin mining and investing and various other things, that's high risk in today's environment. When you start, generating a wealth effect, if you've been in Bitcoin for long enough, and I'm not saying the future equals the past, it's hard for people to comprehend how ruined the user experience of money is. when you do something that's not 100% in line with exactly what they consider a normal person's behavior to be. Thank you.
Okay, next speaker is retail clawback is criminal.
Hey, hi, Simon.
Hello.
Hi. Okay, just a quick question. See what's your thought here. Let's say CBDC comes out this week. It's running, and they say you're not allowed to buy crypto. So all the banks they're blocking any transactions to Coinbase, any exchange there. So that's their regulation. CBDC doesn't allow retailers or anybody to convert their money to crypto. In that case, I know we can do P2P using crypto, transfer wallets and all that. But let's say I wanna buy more Bitcoin, I wanna buy more crypto. How would you go around that if you're not allowed to now, the CBDC to buy more crypto? What's your thoughts if that happens?
Yeah, I don't think it's any different from what we have right now. So at the moment, with or without the CBDC, that can happen. You can sanction crypto transactions straight away. You don't need a CBDC to do that. It just makes it easier to enforce. And so I think it's a bit of a narrative that doesn't change. And what I've seen is that every threat of a ban leads to, for example, right now, all of the crypto companies are using their offshore dollar bank accounts. A bunch of it's gone to Hong Kong. A bunch of it's in Bahamas and various other jurisdictions. And so the stupidest move you can make, for example, what China did, is they allowed Bitcoin mining, which is essentially the process of taking your Chinese yuan, buying machinery, and ending up with Bitcoin at the other side, versus allowing the exchange to prevail, where you get the on-ramps and off-ramps and you get to control the KYC. So they'll do it because data is power. And if you give the data to another country, then you have to have a massively coordinated attack globally on crypto, and there will always be a country that sees that as an opportunity. It's the reason why these fringe industries exist, because there'll always be a country that can do things correctly with the regulations and allow that industry to prevail. And also because the politicians want it as well. There's a reason why countries have offshore tax havens, because they want to use them. And so, a massive number of, politicians are not, they're exiting the system themselves as well. And so the whole concept of the global ban has been a threat from day one, but we're yet to see it. We see choke points. We see countries that see it as an opportunity. And then you see a reallocation, and the hash power just keeps going up, and the adoption just keeps going up. And why would a country not want to accumulate their own stack of Bitcoin? And the more countries that do that, then you don't really have an incentive. You're kind of in the gold situation. Yeah, America made gold ownership illegal. A country could do that, but no one did it globally. And so while it is a theoretical threat, just like the 51% attack and quantum computing is these theoretical, and the 1 million Satoshi coins moving and being sold, these are all theoretical threats. And that's what creates the opportunity, because those if you wait until all of those are known, then Bitcoin will probably act like gold at that time and be a wealth preserver, rather than a wealth creator, as it has historically performed. And I can't promise it will perform like it has in the future. So it's a theoretical threat, but I believe that competition and opportunity in a globally competitive environment probably takes it away. We're already seeing that in America. Like some states are saying, Bitcoin mining is a great opportunity. Biden says, let's tax it. Let's create a tax on it. And other states are saying, oh no, this is creating a great industry in Texas. So I think it just continues in that way, and I think that Bitcoin is something that the world wants. Whether it's a politician using it, a government using it, a company using it, or an individual using it, you can't close it down, you can't stop it, unless you can get countries to globally coordinate. And I don't think countries want to do that. I could be wrong, but that's one of the risks, I guess.
Next speaker is Jimi Hendrix.
Yeah, hi. I was actually going to ask about choke point 2, which you probably sort of answered pretty thoroughly. But do you think the sort of near term, the adoption is going to be skewed towards those people who are more financially sophisticated? Because in America, where they're cutting off people's ability to actually onboard onto exchanges, they're restricting the amount that they can actually sort of pay into an exchange. Do you think that's now going to become the preserve of the wealthy or larger corporates who are able to move their wealth around offshore and into other markets and private banking?
So I'm going to cover Operation Choke Point next week. And I've just been doing a bit more research into it. And Caitlin Long's going to come on next week's Twitter Space as well. And we'll try and get Nick Carter off. He hasn't replied yet. Hopefully, everyone can tweet him and spam him and say, "Come and join us next week." But yeah, we're going to cover that one next week. Personally, like one of the things we tried to achieve at Bank to the Future was take private equity and make it accessible to everybody. And Bitcoin did the same. It created the ability to have a Swiss bank account for everybody. And I think that trend continues. So the products of the wealthy, thanks to this innovation, become the products of everybody. So I don't see the old boys network and opportunities just for the wealthy, because what I would do right now is, if I had no money, would be exactly the same as if I'm in my position right now. It's just percentages, because the products and fractionalization has opened up. Like one of the things we created was the ability for everyone to have their own company for their retirement plan that can significantly improve the efficiency of tax reporting and asset protection for Bitcoin and crypto. And many people have it in their IRAs and various other things. We're seeing the large players and financial institutions seeing this as something they need to get into. So it is. Banking has always been an issue in our industry. It just got solved and then became an issue with US dollars for a very deliberate reason. But we've already seen Fidelity, BlackRock, NASDAQ, everyone in the traditional players announce their solution. It's an opportunity. So it does get solved. Sometimes it's hard to know how it gets solved. And then that always also pushes out there's a certain amount of Bitcoin and crypto adoption we have so far. So it's created like a bit of a circular economy where you don't want to go to fiat because you're fearful you can't come back in. And so people are looking at how they can use various innovations in order to stay in crypto, because it's almost like a premium. But yeah, there will always be countries and an opportunity for another currency to just become that layer. And as long as you can convert dollars to euros or dollars to pounds or dollars to any currency, then someone will plug the technology together that allows you to solve that problem. It just becomes a problem for entrepreneurs and financial institutions to solve. And that's how it's always been. But banking's always been an issue. Like, you just, all it does is it doesn't stop it. It just means you have to pay more for it, and you just get very expensive banking rather than free banking.
Okay, next speaker is Patrick.
Hey, thanks, guys. Simon, you might have partially answered this question previously, but in case I had missed a previous question, I'll ask it again. So as this is a central bank digital currency, this is being marshaled by the central banks themselves, and they operate together. Right today they operate as a cartel, really, in terms of, there's interbank lending rates, there's certain agreements that maybe are happening in private, that they use to, normalize, let's say, their market for money. For a CBDC, it seems to me like a crucial point would be when it's introduced, because the most amount of money in fiat money in various other currencies, and that'll be the largest amount of money at the moment. Let's say it was introduced tomorrow, by a couple of countries. The value of how it's introduced, like where it stands in terms of convertibility against other fiat currencies, be it the pound, the euro, the dollar, the yuan, the ruble, etc. In terms of the central banks have a power to possibly, into how they value it, could create a demand to move into a higher value. So if you have a digital dollar and a fiat dollar, if there's a slightly better advantage, that's set initially on the CBDC, they have a kind of ability to suck, to convert those fiat dollars into CBDC. How would that go? Have you thought about how that arrangement would go? Because that transition period, be it over a long period of time or a short period of time, the banks really are able to kind of really manipulate that, in a certain way that's quite extraordinary, actually, if that's how that transition would go. What are your thoughts on that, mechanics of that?
That's a really interesting question. I think it would be similar to what we've already seen. So at the moment, you have PayPal dollars and USDC dollars and M1 dollars and M2 dollars and M3 dollars and dollars that are cash and dollars that are in a money transmitter, or dollars that exist as a petrodollar or a euro dollar. I think they just integrate it as one dollar, and then they just have a different denomination for it on the central bank's balance sheet. And so I'm not sure that they're going to be tradable amongst each other, but maybe that creates interesting markets where people value. At the moment, people don't tend to, I guess if you had money locked in PayPal and you were trying to sell it to somebody that had money in a bank, it's kind of like a contract on your ability to access that money. So if you have these interesting markets, a bit like, people have Amazon credits or something like that, which they see as close to the dollar. How do they value that relative to cash or money in a bank? And so I think you get maybe these interesting markets, but I didn't see it as them creating markets for CBDC dollars versus bank deposit dollars. I think we see it as dollars, and then maybe people value those things differently in terms of different markets. It's an interesting question, though.
Okay, next speaker is Global Stablecoins. Okay, they can't hear us. Global Stablecoins, can you hear us? All right, next speaker then.
Let's take these as the last questions for people that are coming up now.
All right, cool. So we've got 3 more. So let's go with 51.
Yeah. So, I mean, my sentiments are, Bitcoin's one of those cryptos out there that, hasn't really been deemed a security. It'll be hard, like you guys say. I mean, you can say to citizens and stuff as well, this is banned in your country. But I think it's one of those things where governments are going to have to adopt, to a digital currency of their own, especially over the next couple of years. Bitcoin is one of those things that's going to be around for a while. What we've seen with the bank situation recently, it's only going to get more people to invest in Bitcoin. Highly doubt it's going to go to 1 million, but I think there's a lot more growth for Bitcoin and other cryptos as well out there. But people have to just be cautious out there with certain situations. There's different, with recessions and all that. There's so many different factors that can play in. So just be cautious if you're investing in certain things, and be cautious where you put your money. The whole, not your, not your keys kind of a phrase is always one of those things you got to keep in your mind, where you put your money on different exchanges, and you think something's secure, and then all of a sudden it collapses, and it's like, oh no, I thought they had insurance. So you just got to be careful what you do. But I think it's one of those things where Bitcoin, especially with the ordinals that they have right now, is going to get a lot of attention over the next few months. And, I think it's one of those things where there's a lot of growth. We saw it a long time ago as well. There's a lot of different predictions. And I think it'll be interesting to see where it goes over the next little bit. There's other factors to consider, but I would highly watch different global situations, different places, and then kind of, follow what Bitcoin does, because the next few months will be very, very interesting.
Yeah, I take a long-term view, and I try to ignore all the noise, and I just simply keep it really simple, and it's worked for me. And my simple philosophy is I want to have more Bitcoin this month than I did the previous month. And that can be achieved in a couple of ways. It can either be by just converting my income that I receive in fiat into Bitcoin, or it can be achieved by making an investment with that Bitcoin with a percentage of it. I keep it pretty simple, and I try to define what I'm doing and what I'm protecting from, and then I just stick to it and just keep sticking to it. And for me, that's worked. And I think, at Bank to the Future, we've always tried to create products that get people into those. It's almost like reprogramming your brain. So I had to reprogram my brain just to value my wealth in Bitcoin. And that's some of the things that we've been working on, is how do we create technology and education that helps people form those good habits and protect for different situations. And so we're really excited about bringing more of that to market as well, especially just from what we've learned and just experienced over the blowing up of many of the centralized crypto companies, some of which I was shareholders in, as well as many of the forecasts that came to be with Bitcoin and the banks. Okay, thank you.
Okay, we've got two more speakers, Niku and then Daniel. So Niku, you're up. Or Niku. Okay, let's move over to Daniel.
Hi, thank you for letting me ask my questions. Simon, I've been listening to you now for years. I really, I adore your theory and how you look at Bitcoin. I've been investing in Bitcoin since it was like $700 or euros back then. But I don't see it as my wealth. And the only thing that I question for the future of Bitcoin is it's very similar to the dollar, but it is scarce. What I mean by that is you have the top 10 holders. You have Tesla holding 100,000 Bitcoins. You have MicroStrategy holding 100,000 of Bitcoins. You have the early investors. What do you mean when you say if you would have to start again today, you would do exactly the same by basically DCAing into Bitcoin? How, it's very difficult for an average Joe to accumulate 10, 15, even 5 or even 1, I would argue, in a lot of communities, Bitcoins. What do you actually mean? Because the way I understand your theory is Bitcoin actually would have to raise to $1 million or $10 million, that a fraction of it's like that one sat creates some kind of a wealth for an average Joe, basically.
Yeah, I mean that I earn in fiat, and if I still buy. People think my wealth is because I bought it really early, and then got lucky, and therefore I'm wealthy. The reality is the bit that I did that was I continued to buy. And no matter what the price is, I bought Bitcoin at $69,000. I bought Bitcoin this month at $28,000. I just pick one day a week where I diversify for my 3 different outcomes and allocate money in my 4 different ways of buckets. And so I just keep doing that, and all my wealth came from Bitcoin.
No, I do.
And
I do understand that. I honestly, I do the same. I did not buy at 69,000, thank God, but I did buy, yesterday at 27. I buy on a regular basis. What I mean by it, disregard those with a bigger Bitcoin portfolio. Just imagine, like, today somebody starts to DCA, I don't know, let's say $500 a month, $1,000 a month, which would equal to, like, I don't know, 0.04 sats, for example. Today, Bitcoin would have to increase substantially, that $500 or $1,000 or even $10,000 a month would create you meaningful wealth.
yeah, so I think my simple philosophy is I believe the demand for money you can own, money you can spend, and money that has a fixed supply goes up over the long term. And so I believe that trend continues. So I just think Bitcoin gets rarer and rarer. More and more people lose it. And so people have to pay a higher price for it into the future. And I think its utility goes up over time. That's my speculation. And so I just simply say, I want more Bitcoin this month than I had the previous month. And I'm not thinking of, I need to have 1 Bitcoin or I need to have 10 Bitcoin, because that's a false narrative. If everyone, the percentages are percentages are percentages. And people think like, oh, you can't make wealth by investing $100 a month. Someone that invests $1 million a month is going to make more. But percentages are percentages are percentages. And so what I try and do is say, the wealthy person is doing the same as someone that hasn't accumulated wealth. It's just the numbers are smaller, but the percentages are the same. And the rules of dollar cost averaging, not trading, not over trading, they all work in the same way. And eventually, I believe that everyone, if they have a long enough time frame, I think they can play that trend. And I think eventually Bitcoin becomes like gold. And you could do this at a slower rate, but now everyone's got the opportunity to do it at a faster rate, because I think we're so early in the adoption cycle. So I get it. The returns diminish over time, but you could still do sound investing principles of investing in hard money and dollar cost averaging and diversifying, and have a percentage for more speculative stuff. Everyone can do that. The only reason they wouldn't do it is because they want to make money too fast. And that's why everyone ends up in blowing things up and trying to make money too fast and over trading. And I've seen it. Like, I've seen people that were there at the very same Bitcoin conference that are broke right now because they over traded, even though they were involved in the highest performing asset class in history. And so it's a game of psychology. It's programming your brain. And it's actually, I mean, one of the first things we do with our clients is we just get out a spreadsheet and show them, if Bitcoin just does this, which is ultra conservative, and I'm not saying it will, this is how long it takes you to achieve your financial goal. Most people, they don't actually know what they need in order to achieve their financial goal. And then when you add income and things like, you take a bit more speculation with something that can generate higher returns because it's got more risk, like Ethereum staking. When you can integrate that into your Bitcoin strategy as well, people just, the biggest enemy that I've seen of wealth generation is people overestimate what they can make in a year and underestimate what they can make in a decade. And we've always tried to give people those longer term thinking, and if you can integrate those habits, and I know it can be done because I've done it, and I know what the feeling of FUD and FOMO feels like, and wanting to always chase those high returns. It is a game of psychology in the end. Okay, thank you.
Okay, that's it.
Okay, awesome. Okay, so thank you everybody for bringing really amazing questions and stimulating thought. The one thought I'd like to leave you with is that, we speculate on what comes next, but the real thing about building and protecting wealth, from my experience of blowing up a lot of wealth and making wealth and being on the academic economic side and being in the inside in the investment bank and being in Bitcoin in the early days and the late days and investing in lots of different companies along the way, and is that prepare for different eventualities. And Bitcoin, I believe, creates an amazing opportunity. And I think the power of information is an amazing opportunity that we should all be taking advantage of, and the power of community. And so I'm just really grateful over the last year or so to just experience these Twitter spaces and to be able to build a relationship with people where we couldn't have built a relationship before. And so I end in the way that I always end. So always remember, we're alive at one of the most interesting and exciting times in financial history. Some are going to get wrecked and get on the wrong side. Others are going to do really well. And the information that you have access to, you can try and make sure that you get on the right side of that change, prepare for more than one outcome, and have a longer term time frame. Do it with peace, do it with love, do it with unity. And yeah, I'll see you next week. I'm going to be doing the Operation Choke Point. And yeah, do me a favor, if you enjoy this content, then share it. We'll upload this to YouTube as well for those that are listening on YouTube. And yeah, trying to get my subscriber base. So if you're not a subscriber to my YouTube channel, Simon Dixon, then hit the subscribe button, hit the bell symbol, hit all, and I'll keep releasing content. And we've got lots and lots of products that we've been working on during these times of, we were very fortunate. We made lots of the right moves. We focused on regulations. We focused on being, investing in assets that allowed us to survive through these times as well. And we get an inside track into a lot of the companies that have done very badly and have done very well. And so I'll always look to try and share that information with everybody. Okay, thanks for the Twitter space. I'll see you this time next week. Over and out. Bye-bye.